Has Hong Kong's old growth drivers eclipsed? Peter Cardillo is with me down the line. So Peter, Hong Kong's growth continues to rely on mainland tourism, low interest rates and trade. Now these factors sound legitimate, but are you concerned about the economy? If diversification is key, where else should they be looking?
Well, I think, there's no question that mainland China continues to be the main driver for Hong Kong. And of course, they're very much dependent on tourism and low interest rates and trade. But the fact of the matter is that, what we're seeing in mainland economic activity is just a readjustment of the economy, and don't think that China is headed for a hard landing. So pretty close, I think, in reaching level where the economy can continue to mull along, certainly at growth under 7%, but no real danger of a hard landing.
Government economists predict the current push towards standardised working hours in Hong Kong could drive up inflation by 2 percentage points and leave many out of work. Is this a justified analysis, or is it simply scaremongering?
No, I don't think it's a justified analysis. I think that if a standardized hour in Hong Kong would go into effect, that inflation probably would not go up by 2%. That's not to say it's not going to go higher, but certainly not by 2%. There are other factors involved here. I mean, if we look in other industrial nations of the world, especially here in the States, we see that even though we have a tight labor market and we've had an increase in our wages, the inflation in terms of labor growth is pretty much contained. So I don't think it's justified to say that we're looking at 2%.
After 2 years of debate, we have news: the committee discussing the work hour issue is still in stalemate. What do you make of the suggestion this is another indication of a lack of innovation and foresight, which could be the nail in Hong Kong's economic coffin?
Well, I think it's, lack of innovation. I think it's just a lack of trying to implement anything and just hoping that mainland China will straighten out and they will continue to go on as they have in the past. So I think it's typical of governments wanting to drag out a debate when they themselves don't really have a grip of perhaps the future of economic activity.
The Hong Kong dollar peg was once described as a beautiful self-adjusting mechanism. But with US rates stuck at zero for 7 years, there are no longer interest rate attractions to one side or the other. What is your outlook for the Hong Kong dollar and indeed the survival of the peg?
Well, I think the Hong Kong dollar will probably remain steady towards the US currency, but I think the survival of the peg is doomed. It's just a matter of time before they have to let loose, and I think that that could be somewhat painful for the Hong Kong currency itself.
Well, that's all from Peter and myself, but if commodities are more your thing, have no fear. Click back for our Commodities Corner with Louise McCauley. Goodbye for now.